All right, guys, big earnings day. This is our second video. We just did Google. We're doing Microsoft right now, and we're doing Visa next. So do me a favor, subscribe to the channel. When it comes to earnings weeks, we put out 4 or 5 videos a day reporting earnings. And in a normal week, we still put out 2 or 3 videos a day. We follow a value investing mantra, do we not, Mo?
Yeah, we are wanting to buy these companies at much lower prices.
I just got off the phone with Warren Buffett. He said I'm the best investor he's ever met. But it's a different Warren Buffett. It's not the one you're thinking about. So I cannot confirm or deny if that's a true statement or not. So
thanks for conferencing me in.
All right. So Microsoft just announced $238 per share in profit versus $231. So they beat by 7 cents. $50.1 billion in revenue versus $49.56. So they beat there too. And Mo, what's it doing after hours?
Down.
It's down $4 after hours. Guys, this is a stock that hit a high of $359 for the year. It's down to $246. It hit a low of $219.65. Guys, I like Microsoft. I cannot wait to own Microsoft. But the question is this the price to pay for it? Well, if you're new to the channel, that's why we use Stock Analyzer tool. But let's go look at the press release directly from Microsoft. Operating income was up 6%. Revenue was up 11%. Net income decreased 14%. So that's a driver, and 8%, down 8%. And remember, there's a lot of currency issues right now because the US dollar being so strong. So it's being mentioned a lot. Let's see here. In the world facing increasing headwinds, digital technology is the ultimate tailwind. Thank you very much, Chairman and CEO Nutella. Okay.
He's paid the big bucks.
Yeah, I don't really care for those statements at all, but let's go down below. Go ahead.
Azure, their web-based.
Azure, yeah, Azure.
What was it called? Azure.
I thought it was Azure.
Azure?
Well, whatever it is. It's their cloud-based computing.
Grew 35% in the quarter. Expectations, however, were 34.6%.
36.4.
36.4 and 40%. Imagine growing 35% and that's not good. That's a miss.
It sounds like everything money.
Sure.
Okay, analysts had looked like for 36.9. So guys, the world of cloud computing is becoming very, very competitive. Why? It's a high margin business. AWS, Amazon Web Services, has dominated it. They put a lot of money into it 10 years ago, and it's really paid off. But now everybody's entering it. That's what happens in business. When there's a high margin business that has not low barrier to entry, but it's not hard for all these major companies to enter the business, right? So you've got to remember that. Like, there will be a drive down in margins at some point because everybody's going to be in it. It's a much more commoditized business. So let's go look right here. In terms of revenue, 2021 versus GAAP versus 2022, the increase about 11%. Yep. So diluted earnings per share, 271 versus 235. This is all right here for you. It shows it all up. Office commercial products and cloud services revenue increased 7%, driven by Office 365 commercial revenue growth. That's what we use here. At our company, we use Office 365 commercial. I freaking love it. I think it's great now. I don't have to go buy a CD from the store, but everybody does that now. I love the subscription. What are you laughing about? Remember when you had to buy a CD and you wouldn't get you would have to like wait 4 years before you had to like buy an upgrade because you didn't want to spend $290?
I remember.
And now we just spend like $70, you get 5 licenses. You know what I mean? It's like, come on, whatever the number is for commercial. I don't really pay attention.
Forgot about the CDs.
CDs are the best. No, they're actually awful.
Floppy disks.
Now, I will show this. Revenue in personal computing was $13.3 billion, decreased slightly. Windows OEM revenue decreased 15%. That's kind of a lot.
That's a lot.
That's kind of a lot, but PC sales have been struggling this year. That's a big reason why the chip companies have had a drop in revenue. PC sales have struggled.
And they're saying and struggled relative to where they went for COVID. They're kind of coming back to normal almost. Not really so much struggling if you want to look at it that way.
I gotcha.
Yeah.
So Microsoft returned $9.7 billion to shareholders in the form of repurchases and dividends. Guys, I hate it when companies make repurchases when the stock is expensive. Spoiler alert, I think the stock is expensive, but how do we know that for sure? Well, we don't know that for sure. At the end of the day, what matters is, oh wow, now it's down 2.5%.
Yeah.
In that time. Okay, let's look at the 8 pillars. Just like Google, guys. High PE and price to free cash flow. Everything else is 18% ROIC, big revenue growth, big net income growth, big free cash flow growth, little debt, not as little as Google. Google had 0.95 times their 5-year average free cash flow for debt. This is 2 times, which is still low. And that pesky buying back of shares, I don't understand why companies buy. I do understand why companies buy back shares when they're expensive, and it's absolutely stupid. You should only buy back shares when your stock is cheap. So Let's look at the analysts.
I'm actually quite surprised by this growth.
Look at that, doubling in the next 5-6 years.
Yeah.
I'm doubling the EPS. Yep. And then the revenue growth. Man, good revenue growth. Yeah. Low double digits. Okay, so what do we do with this? We use our stock analyzer tool. We're doing a 10-year analysis. I'm going to take the analyst estimates of revenue growth and make it my top revenue growth number. So, Mo.
468.
Bro.
4's low. 8's normal.
I think 6, 9, 12 because they had high revenue growth numbers. Okay, fine. How about this? How about 5, 8, 11? 5, 7.5, 10.
Okay.
Because guys, so you might sit there and go, what are these guys doing? That's the point here. We don't know the future. We will never know the future. All we can do is make assumptions. Mo and I, our goal is to make low, middle, and high assumptions and buy when the company seems like it's a very good buy at that time. And then when that happens, the stock will probably drop further and we try to buy more. That's the goal. But remember, stocks always drop because of public opinion turning on the company, an over-exaggeration of a problem. So when stocks are flying high, it's because everything is rosy, everything's good. It's amazing to me that now that every single CEO thinks we're in a recession 100% guaranteed the next year. But we were talking about how this economy was on unstable footing last year and earlier this year. We were told we were crazy. We were being negative. We were FUDs. Yeah, no chance of recession. It's like, okay, sounds good. Profit margin. All right, Mo.
Let's see. 10 years, 28%. So maybe 20, 27, 28, 29.
See, I think their margins increased in the last 5 years was 31%. So I think 27, 29, 31.
Okay. You don't think 27 is a little low?
It is probably a little low.
If you're going to go, okay.
But 31 is, how about 28, 30, and 32?
Okay.
Okay. Free cash flow margin, the same thing?
Same thing, yeah.
Okay. PE, 25 PE currently, 28 price of free cash flow. These are all in the last 12 months. Mo, hit me straight.
14, 15, and 16?
I'm fine with that completely. Guys, it's a big company. Yes, it has a high return on invested capital. We can justify a higher PE, but it's a huge company. How are they possibly going to drive up that revenue?
Nearly $2 trillion, $1.87 trillion.
Yeah. So, desired return. Should we do the same as Google?
Yeah, I think so.
12, 13, 14. Yeah. Guys, the bigger the company, I think your margin of safety should be lower. You're still making higher assumptions. So, again, hit the analyze button. The company is currently at 244. Remember, if it's all green, it doesn't mean go out and buy it. It means go do your research. Check out everythingmoney.com. Join our community. Thousands of investors in there talking every single day. And I'm sure we've already been tagged in 4 messages. I'm sure it's about Google and Microsoft already. So where do we stand here?
Let's see.
Well, before I go there, remember, we have a lot of videos coming out. Subscribe to the channel. The second I show you these prices, we're ending the video. So let's go from there. Boom. A low price of 110, a high price of 165, middle price of 130. Add it to your watch list. It's on mine at 170. That's when I'm going to start doing more research and start to sell puts at lower prices. Thank you very much for your time. Please subscribe to the channel.